Yo, what's up, guys? So just a little bit update on this particular market we took on around 3 days ago. This was on Thursday. On Thursday, so this is the can call it arm gains part of the U.S. stock market. And when you're looking at it, you look at it now. Let's remove this. We don't need this one right now. So if you look at it, you can see go a little bit higher on the weekly time frame. You can see the trend is very bullish, and currently the market had returned on the weekly. I'll say the weekly pivot, because previously this was like the trend pullback, then price went higher, of course, and it went higher. But you can see before going up, we have this what we call the internal market structures here, like this, and then it went higher. So back to this pivot, and we're looking forward for continuation to the upside. So these are pivots that the market is currently sitting at, and if you go to the daily time frame, you get to see this particular area. So this is our rally correction internal structure here. Then you get the rally. So we're back here on this pivot, and as long as this pivot is not broken, we are looking forward for continuation to the upside. So another thing that you can see here, look at this. This is not just like, look at this. This is what you call a demand, whereby you have drop base rally, and they happen just to accommodate this particular demand here. I know that the entire demand started from here, but this was a little bit like a daily time frame demand being covered by the weekly. As you can see, being covered by the weekly, and the zone is really good. Price left the zone in a good way, a very nice departure. Demand beating supply, and price goes up. So the market came back here. We actually took this trade around this area. It got activated on, this was on Friday actually. This was Monday yesterday, and this is today. So already now the market's closed. We closed with a very strong bullish engulfing candle. So probably I'll say we are looking forward for a push to the upside. At least I'm targeting at least 3R, targeting this opposing supply here. This supply here, it's a level that I'm watching. But I look at valuation. If we approach this zone and we realize that the price still cheap, which means that it can continue buying, then I'll continue holding the position with a tight stop loss. But you know, stock market, they are very reactive, to demand and supply. So of course I'll have to have a tight stop loss. Now, the other factor is that if you look at the fundamentals now, if we look at our tools, right, the valuation tool, here you can see we undervalued against the interest rate and the dollar, right? And this is like, let me see, is it short term or long term? Is it short term or long term? Oh, this one is long term. Look at this. This is long term. Because short term, let's go back to my tools. Let's say, go back to my tools here. To go back, a quick one. Right. And come here, and you can see we undervalued short term. We undervalued, which means that if we undervalued, it means that we are cheap and the demand has a higher probability of holding. So here we undervalued against the, I'll say, if I'm trading stocks, most of the time I'm paying much attention at interest rates and the value of the dollar, so I can remove gold prices here. And you can see here a little bit back testing. You can see we undervalued here. And guys, this is the interest rate, and this is the interest rate, and this one is the dollar. Now, if you undervalued, we get the rally. You can see here we undervalued, we get the buy. And not just undervalued, like here we were extremely undervalued. Put that line, you can see here, extremely undervalued, here extremely undervalued. Here we were not extremely undervalued, but we were undervalued around this area. Now, where else? Here we were undervalued against the dollar and the interest rates. Here we were extremely undervalued against the dollar. Here we were undervalued against the interest rates. Let's look again. Here we are undervalued compared to interest rates and the dollar, the two of them. And here undervalued here undervalued, and where else were we undervalued? Here. Let's reach here. We're back all the way. We've gone back all the way to 2024. And every time we undervalued, guys, we get a buy. So if you undervalued, it just means that that particular asset is cheap and it can be bought. You can see here, 2 days we went higher and again it dropped. Here, look at this. Here we're just coming from near undervaluation down there, and price went a little bit higher, coming back to some areas here. This pivot here, we went higher. Now look at this area. We undervalued here, we get the rally. Undervalued here, we get the rally. Here we were undervalued. It see we went up 1, 2, 3, 4, 5. At least 5 days before we went lower. Now again here we were undervalued and we went to the upside. Here we were undervalued, we went higher. Here we were undervalued against the interest rates and we get the rally. Here we were undervalued and look at the buy, a good rally to the upside. Here we are undervalued at least a couple of 2, 3 candles here. See 3 candles to the upside before price dropped. And again here we are undervalued and we're looking forward for a rally. Now, what is this that is so special about this particular asset here? What is special here is this. Let me show you. First of all, let's get rid of this lines of valuation because that was like a quick back test. Let's get rid of this one. Move here. This one, this one, this one, this one here. So valuation, actually I use it to measure the value of any asset and I can buy. Now let me show you something here. Let's go to a weekly time frame. Long term. I'll just like bring in this tool like this way. Every time we undervalued long term, because now this one's like long-term valuation. It means that the asset is too cheap and investors are willing to buy more shares because you're looking at the interest rates. If you study bond prices, if bond prices goes up, the interest rates goes lower. If bond prices goes down, the interest rates goes higher, and that attract clients. Investors here, the rates are down. I say bond prices are down, the dollar is down. These attract investors. The last time it was like that, look around this area, we were undervalued. Here, we were undervalued. Here, we were undervalued. Look at this. Here, we were undervalued. And guys, every time we get undervalued, you will see what happens when you bring in the market. Here, undervalued. Here, we were undervalued. Here, undervalued. Here, undervalued. And here, undervalued. Let me stop here. This is 2014. Now, let's go back to the market. And if you undervalued the market, if you say that we undervalued against the dollar and the interest rates, it will go back. Could be figuring out what is this. Go back here. You see this is the DXY. You measure the value of the international transaction of the dollar. And here, this is just the US Treasury bond here. Now, when you bring the market, what do we get? Look at this. Where's the market? Here. Can you see? Look at that. Let me even put down that here also we undervalued here. Let me hide the tools and look at that. Every time we undervalued, the asset's too cheap and investors are willing to put in their money, and you see the buy. Undervalued, we get the buy. Undervalued, the rally. We undervalued here, massive move. Undervalued here, massive move. Here undervalued, of course, went up, then it dropped. Again undervalued, the rally. Undervalued, the rally. Even here, we are undervalued. I just need to confirm. You see here, we were almost undervalued, but that was like not good, but almost there. You see the price went higher. Here we were undervalued, the rally. Look at this. We're just coming from undervalued. And guys, this is not the RSI. Get it right. This is not the RSI. Undervalued and price goes up. Undervalued, the rally. Undervalued, the rally. Now we are getting undervalued, guys, again for the second. Like the last time we were undervalued like this was way back in 2024. Now 2026, like a difference of 2 years. Now again, which is the US shares, stock market is now cheap and you can buy your shares. But anyway, we trade like the CFDs, then we're looking forward to get a long position from there. So we can remove the tools and we can say Here we are sitting on this weekly, and it's not just a weekly, it's like you can call it a monthly. Look at this. This is a monthly covering the weekly demand, and it's also covering what we call the daily demand. So these are quite a very unique level. Price pushing up like that, closing the strong candle. Definitely, let's see how tomorrow is going to close. Otherwise, if you're still holding your position, stay in the market. See you in the next video. That was just a quick update.